This interview is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome to Cambridge House Live. I'm Vanessa Collette at the Toronto Resource Investment Conference. Today, I'm joined by Eric Sprott, CEO of Sprott Asset Management. Welcome, Eric. Great to have you here with us today.
Vanessa, good to be here. And by the way, congratulations to GoldSeek. I read the articles all the time, and I'm glad that you're out there educating people about gold and silver, so I appreciate being here.
Thank you so much. It's great to hear. I mean, you know, people really do need to know what's going on out there behind gold, you know, some of the hidden forces and all that.
Sure.
My first question for you is, in a recent interview in the Globe and Mail, you mentioned that you believe gold will be at $2,400 by next summer.
Okay.
How do we get from where we are now to there?
Well, I think that my primary thesis has always been that there's way more physical demand than supply, and that the Western central banks have been supplying that excess non-transparently, and that sooner or later they're just going to run out. And I already think in these last 8 months, which have been tumultuous, it's really the central planners trying to keep the gold price down and force gold out into the market, physical gold into the market, which they've been somewhat successful. But they're not going to be successful the next time around, and the demand, all the data we see is terribly positive on the demand side, so we'll win the day. Even looking at 2,400, people think, well, boy, that's a big number. Gold's gone up 500% in the last 12 years, from 250 to as high as 1,900, almost 700%. So I'm imagining it might go 25% above the former high. It's not a big reach, okay? As you undoubtedly had guests who imagined $5,000 and $10,000 prices. Well, I don't think 2,400 is too much of a stretch.
Right. Do you think the main reason behind that is the divergence between the physical and the paper markets that maybe people aren't aware of?
Well, of course, most people, it's very difficult to be aware of the physical markets because most of the data is not apparent. I mean, we don't know how much gold is being bought by Saudi sheiks or Russian billionaires or even private individuals who don't buy coins. I mean, if I go and buy a bar, nobody knows that I bought a bar. So we've only got very little information available on the physical side, but what little information we have is screaming at us that the demand for gold is outstanding. And I point to two factors. Just the central banks have changed their buying habits by 1,000 tons a day. The Chinese have changed The Chinese have changed their buying habits by 1,000 tons a year. That's 2,000 net tons of buying in a 4,000 ton market. Well, how does some new guy get to come in and buy 50% of the market and the price go down? There's somebody supplying the gold, and it's been my thesis that eventually they'll realize they're not going to be able to keep the price down, and their selling will have no effect and the price will go up, and it probably go up substantially above anything I'm imagining.
What do you think would be some of the catalysts or triggers for that to happen?
Sure. Well, we have some now. We have this gold forward rate that's gone negative, and it indicates a tightness in gold. We've seen the inventories in COMEX fall dramatically from 11 million to 7 million ounces. We've seen the dealer inventories that are available for delivery plunged to like 20 tons. To put it in reference, China imported 100 tons of gold last month, and the dealers have collectively 20 tons to deliver, and I think that all of that gold's been nominated for it already. So I think we're very close to seeing other manifestations of it, but it's there already.
Right. Eric, what would you do if you were head of the Federal Reserve?
That's a great question. Oh my goodness, what would I do? Well, of course, the dilemma is that they've gone too far. There's been too much credit created, too much paper being printed. It's very difficult to retrench without causing some tremendous economic consequences, including bankrupting the financial system and the government and so on. So that's why they keep delaying it. But I mean, ultimately the system's going to fail anyway, in my mind. If you want to be realistic and you say, look, the policies have all been wrong, we have to change policies. But there would be an awful rude awakening, and it would take an awful brave person to do that.
Right.
So I don't think I'd want to have to be that person to spoil the party for everybody, but the party would for sure be over.
What do you think Bernanke's done wrong?
Well, I think what he's done wrong is that the central planners, I call them all central planners, they just interfere with everything. They won't let things act normally. We had a crash in the NASDAQ in 2000. Well, the central planners weren't going to allow a crash in the market to continue, so we start with the cash for clunkers, the new home buyer tax credits, the jobs programs of this, that, and the other, and then we went to TARPs and TALFs and QEs, and it's been this constant fight against the natural ebb and flow of a market that the Fed and governments have been involved with. And by doing it, we're just blowing out the balance sheets of the banks and the governments and the central banks now. So it's a situation that will not end well, and it all started wrong. That's the problem, that they thought they could interfere with the normal functioning of the economy, and they can't ultimately.
Who are the big winners behind all of this intervention?
Well, of course, the big winners are the financial system, because when they say we're going to keep rates low for a sustained period of time, well, who is the beneficiary of that? It's the banks who take your money and my money and pay us nothing and lend it out at 5% or 10% or 20% of the Visa card. They're the big winners because they have the Fed at their back, and they're too big to fail, and if there's a problem, we're all going to come in and try to solve it. So it's been the banking system that's been the huge winner. I mean, the banking system was in a state of collapse in '08. It was collapsing, but the central banks bailed them out. So the big winners have been the banks.
There's a big meeting next Tuesday. What do you think is going to happen with the taper talk and the future of quantitative easing in the US?
Yeah, well, I'm certainly in the minority, and I just don't think they can taper. I also think they've got themselves in a bit of a box here where they got to look like they're doing something. So, to me, I suspect that they will announce a taper, but they might announce that it will take effect maybe in December. So in other words, you get a bit of both here,
yeah.
But I can't imagine that they can really decrease the buying of bonds without the bond market having further destruction, and it's been pretty well destructed so far this year, and its impacts on the economy have yet to be felt, but they will be felt here soon. So God forbid that they actually do taper and rates go even higher, because then there's going to be hell to pay in the economy.
We've had a reversal of late with gold, Eric, but why do you think it retreated so much over the last several months?
Well, in the last month, it got to 1,400, now it's come down here, actually more in the last couple of weeks. Gold's a very difficult thing to explain, as we've all see every day. It can fall $20 in a second, and the weird machinations that go on in the market. And I think it's a lot like all markets, where you get these flash crashes and the computers go crazy, and I think there are vested interests who want the price of gold down and silver, and those vested interests are people who want us to believe in fiat currencies. And so it's all the central planners of the Western world that want us to think their currencies are strong, when a simple analysis of their own balance sheets and their obligations, we can pretty effectively say they're broke. So it's just a fight that we all have to we have to go through. I've been going through it for 13 years, and there's probably more bad days than good days by a wide margin, and we're having one of these stints right now, and hopefully we'll be out of it real soon. I certainly think so.
Let's talk about silver for a little bit. I know you've been a long time gold bug, but I get the sense that you might be a little bit more of a silver bug in some ways.
Well, I believe that silver will be the investment of this decade, as gold was the investment of last decade.
Interesting.
And a lot of people don't realize how significant of an outperformer gold was last decade, but it went up 700% from the low, while the stock market did nothing. Now, as we move into this current decade, because of the demand I see for silver, because of the small market for silver, and the possible change of, let's say, Indians going from gold to silver, which would take nothing for them to buy up all the demand, all the silver available, and the persistent demand for silver coins that you see demonstrated by the US Mint, and the continuing uses of silver for newer industrial applications. I just think silver will outperform gold by quite a wide margin here as we finish off this decade.
With everything that's been going on in India, what makes you think that Indians will replace gold with silver, other than the import restrictions that they've put on?
Right. Well, I don't think they would as much. I think their demand's gone up considerably here in the last 6 months, I think the demand is total something like 3,000 tons so far this year versus 1,900 tons all of last year. 3,000 tons is about 12% of the annual supply of silver, which means if they went to 6,000 tons, they'd have 24% of all the silver when they were only 8% last year. So how we're going to fit that much buying into the silver market just would amaze me. And if they really insist on there being no official gold brought in and people go to silver, I mean, the amount of silver they'd need to sate the Indian demand for gold would be so staggeringly large, it would probably take 2 years of production.
And we're talking about a much smaller market.
Very small. Like it's only a $25 billion market. I think the gold market's something like $14 trillion, so it's peanuts.
Official figures are telling us some interesting things about what real inflation is. Where do you think inflation really is in North America?
Well, I'm a pragmatist. And even when, for example, we have to look at gold mines, and everyone points out that their costs are up 7 to 10% a year for the last 12 years. And I said, well, that's because they're producing something real. And they don't get to jiggery poke the figures. And when you want to go and hire a skilled person, his wage is not going up 2% a year. Somebody who's skilled, whether it's like some guy fixing your refrigerator or repairing your roof or your landscape or whatever, like who are doing real work, the inflation's way beyond 2%. When it comes to massaging the numbers that the US government puts out for CPI, and they impute this and impute that, and if beef has gone up, they use pork, and if pork goes up, they use chicken. You know, you always get a misstated number. So inflation's way beyond where it's officially reported.
Let's talk a little bit about the European banks. You know, the numbers that we're seeing there is that things are stabilizing. Do you think they actually could be?
Well, they might be stabilizing. I hate to think that what the status of the bank is, even a stable bank, because when they had the LTRO, what they pour in $2 trillion. I mean, the banking system was a mess. In other words, the deposits were leaving. You couldn't sell the assets. Yes, maybe they've stabilized the bond yields in certain countries through, overt measures by the central planners. But I would imagine that most of those banks, because of the status of their economies, whether it's the Portuguese banks, the Greek banks, the Spanish banks, maybe even now we're going to bring into question the Italian banks. Like, I don't think I'd want to be a shareholder of one of those banks, because I can't imagine that they truly have any capital left if they had to mark their assets to market. And I've always been very much of a worrier of people who believe that banks are a safe place to put money. I don't believe that. I don't think they're safe. They're way too levered. It's been a fundamental concern of mine that you should never let a bank be levered 20 to 1, but there they are, 20 to 1. Probably, I think in Europe it's like 30 and 40 to 1, which is ridiculous. You can't operate in an environment like that with the volatility we have in asset prices and only have 2 to 3% cover. So they might be stable because somebody's supporting them, but if you put them in the light of day in the normal markets, they wouldn't last long.
Eric, what would you tell investors today who may have been burnt by the last decline we've seen in the junior sector, and what are you doing right now with your investments?
You mean the same thing I have to tell myself every day?
Exactly.
Well, we've seen this before. We saw it in 08 when the stocks went down. I think it was like 60 to 70%, and then they rallied strongly. I personally believe it's a better opportunity today than any opportunity I've ever seen in my life, and I'm not kidding when I say that. I mean, I was there in 00 at the bottom. I'd buy 10% of Eldorado and 10% of Cambio, and I thought maybe I could make, 300 or 400% over a couple of years. And I think the opportunity is better today because these companies have been so bashed that you're buying them for pennies on the dollar. I bought a stock the other day where I paid 2.5% of its 4-year high. And it's a producing mine. And I couldn't believe it. I'm paying 2.5% of what this stock traded at, and it's a producing mine, and it's getting better. Like, I just think the opportunities are incredible right now.
What should people look for in a junior, say, or,
Well, I've focused, Vanessa, on the producers right now.
Okay.
Because if the price goes up, the beauty of a producer is he gets the money. He'll get real money.
Right.
The guy who has the property has to wait for the guy who's got the money to come in and buy the property from, or the stock market to come in, one or the other. But somebody's got to change his valuation, something he can't do. I mean, yes, it'll go up because the price of gold's going up, but ultimately, a lot of these companies expect to get taken out. Well, we need producers to have money to take them out.
Excellent. Well, thank you so much for joining us this morning,
Vanessa.
Eric. It was a pleasure, and we'll be watching with interest.
As we will. Thank you, Vanessa.